Today, we are going to tackle a part of the trading day that, let's be honest, can be super tricky, but is just packed with opportunity. We're talking about the afternoon session. Hey everyone, welcome to AI Explains ICT. In this video, we're jumping right into ICT's core content, month 10, episode 12 to be exact, and it's all about mastering the PM trend. I'd really recommend grabbing a notebook for this one because we are going to break down some super practical strategies for that second half of the trading day. You're definitely going to want to stick around. So here's our game plan for today. We'll start by defining what the PM session even is. Then we'll talk about that quiet lunch period before the real action starts. After that, we'll see how PM price action actually plays out. Then we'll get into a really powerful tool called SMT divergence, and finally, we'll put it all together to time the daily range. And of course, we'll wrap up with the key takeaways. All right, first things first. Let's get on the same page. What exactly is the PM session, and why is it so important to pay close attention to it? Well, according to ICT, the PM trend is simply the afternoon trading session in North America. We're talking specifically about the window between 1 p.m. and 4 p.m. New York time. This is a time frame where you'll often see a really clear, distinct price swing develop. Think of it as the second act of the trading day. And trust me, it can be just as, if not more, explosive than the morning. And this chart here lays it out perfectly. You can see all the different sessions. But what we care about is that shaded blue box on the right. That's our playground, the New York PM session running from 1 p.m. to 4 p.m. That's where all our focus is going to be. So what can you expect during this time? Well, the PM session isn't a one-trick pony. Sometimes it's just a simple continuation of whatever trend started in the morning. But, and this is a big one, it can also be a complete intraday reversal, which is where a lot of traders get caught on the wrong side. One thing you'll notice is that the moves in the afternoon tend to be a lot faster, a lot more energetic than the morning. And a little tip from ICT. While the session kicks off at 1, the real move often gets going around 2 p.m. New York time. But hold on. Before we jump into the afternoon action, there's this really important transition period we need to understand. Let's talk about the midday lunch hour. The New York lunch hour. This is usually that quiet time between about noon and 1 p.m. It's when you typically see price just kind of go sideways in a consolidation or maybe pull back a little bit. Now, ICT is quick to point out that this isn't set in stone. If the morning was super volatile, lunch might be quick. If it was a slow morning, this lull could drag on from 11 a.m. all the way to 2 p.m. The main point is, you should expect some kind of pause before the PM session really gets going. Okay, now for the fun part. Let's look at how the PM session's price action actually unfolds. And this is where it gets really interesting, because the afternoon is always reacting to what happened earlier in the day. You absolutely have to get this concept down. The afternoon price moves don't just come out of nowhere. They're constantly referencing key levels, things like order blocks or rejection blocks that were formed during that morning session. The AM session basically writes the story, and the PM session acts it out. And this chart is a fantastic illustration of that exact point. Look at the S&P here. The AM session leaves behind this clear bullish order block. Then what happens during the PM session? Price comes right back down, dips into that level, finds support, and then just launches higher, ultimately putting in the high of the day in the final hour. It's a textbook example of the afternoon respecting the morning's clues. And just to show you it's not a fluke, we see the same principle right here on the NASDAQ. A bullish order block gets formed right around the lunch hour. Then the PM session starts, price trades down into it, respects it, and boom, it rallies away, this time aiming for a rejection block that was created earlier in the morning. You just can't deny the connection between these two sessions. Okay, so we know the PM session reacts to the AM session. Now let's add another really powerful layer of confirmation to our analysis. We're going to talk about SMT divergence. This is how you can literally see the footprints of smart money in the market. So what in the world is index SMT divergence? Well, think of the S&P, Dow, and NASDAQ as a group of friends that usually walk in the same direction. SMT divergence is when one of them suddenly stumbles or starts to lag behind the others. ICT calls it a crack in the market. That little disagreement is a huge signal. It tells you there's some underlying strength or weakness, that the big institutional players are quietly doing something. Let me put it another way. In a normal, healthy, symmetrical market, all three indices are going to be making similar highs or similar lows. They're in sync. But when we spot a divergence, one of those indices fails to keep up. It might not make a new high with the others, or it might make a lower low when the others don't. That failure to confirm is the signal we're hunting for. Okay, you have to look closely at this chart because this is a perfect example. We're looking at the lows made during the PM session. See how the S&P and the Dow both make higher lows? That shows strength. But now look down at the NASDAQ. It makes a lower low. That right there, that's the crack. That's the divergence. The NASDAQ failing to stay strong with the others is a massive bullish signal. It suggests smart money is scooping up the S&P and Dow, and they don't mind letting the NASDAQ dip a little to get their positions filled. And this is precisely how ICT uses this tool. He says it himself. I'm primarily focusing on this crack to tell me if there's going to be an upside movement in the S&P or a downside movement. It's not just a cool pattern, it's a high probability trigger for a trade. All right, time for the final piece of the puzzle. How do we take everything we've talked about and actually use it to anticipate where the high or the low of the entire day is going to form? ICT gives us a beautifully simple framework for this. It's an if-then scenario. If the morning session puts in what you believe is the low of the day, then you should expect the high of the day to be formed in that final hour between 3 and 4 p.m. New York time. And it works the other way, too. If the AM session makes the high of the day, then you should be looking for the low of the day to form in that same final hour. So what's the magic catalyst for this final move? It often has to do with the bond market, which closes at 3 p.m. New York time. ICT has observed that right after the bond market closes, the stock market often makes its final decisive move for the day. This is when the big institutions are squaring up their positions, driving that last powerful push to the daily high or low. Okay, I know that was a lot of info, so let's boil it all down into a simple checklist you can use to approach the PM session with a lot more confidence. Here's what you got to remember. Number 1. The PM session is your key window from 1 to 4 p.m. New York time. Number 2, be ready for anything, either a continuation of the morning trend or a total reversal. 3, always use the morning's key levels as your guide. 4, use SMT divergence between the indices to confirm what you're seeing. And finally, number 5, look for the daily high or low to be put in during that explosive final hour. And that about wraps it up. So I'll leave you with this to think about. How are you going to use this powerful relationship between the morning and afternoon sessions to frame up your next trade? Hey, if this video helped you get a better handle on the PM trend, do me a favor and hit that like button. And make sure you subscribe so you don't miss the next one. And seriously, if you have any questions, drop them in the comments below. We've got a real human who reads them all and will get back to you. Until next time, safe treeing.